let's imagine this is an entrepreneur from Kenya that's going and trying to raise $15,000 for a local business. So they submit this application on the platform. What happens next, and how does that get greenlit, and what does that look like? What does that process look like?
What's interesting is there's multiple levels of borrowing that's happening. And I think we can hinge the story around a credit fund, because that's sort of the folks who are participating right now. Is take a credit fund, for example, AlmaVest. AlmaVest is this credit fund, and actually earlier this week they just raised $10 million through the protocol. And just to describe who they are a credit fund that is experienced with evaluating these different fintech businesses around the world. So, for example, like one business they worked with is a company called Oya in Ghana, and what they do is they provide loans to small and medium-sized businesses in Africa. And so then what you have is a credit fund who is looking for capital, and then they extend a loan to a business like Oya in Ghana, who is then working with lots of great businesses who are looking for capital to grow their businesses. So there's like multiple layers of the borrowers here. But the great thing about working with a credit fund like AlmaVest is they have this great track record of finding amazing businesses around the world that are looking for credit lines, and they can put a lot of capital to work. So they can raise $10 million and then extend multiple loans out to folks after that point. So the way that the protocol works is AlmaVest goes to the community and they say, we want $10 million. We want a $10 million loan, in their case with a 12.5% interest rate. And they propose it to the community of their backers. So the backers is like the main participant that understands who are these different potential borrowers to receive credit lines. And the backers, they sign an NDA with AlmaVest, and they get access to a data room, and then they enter a chat room just with the folks who run AlmaVest, and they are asking them all these questions to understand how does AlmaVest approach the loans that they give out. What's their philosophy?
And this is all on platform, just to clarify really quickly.
Well, this is all through whatever AlmaVest wants to use. So they've used like a Telegram channel in the past. They set up a data room and a Notion doc. And this is kind of the beauty of crypto, which is that they're doing all this stuff all on their own with their own infrastructure. And they're talking directly to this community of backers. And then what AlmaVest then does is they create what we call a pool on the protocol. And this pool is a place for the backers to say, yep, we're going to put capital in here. And what the backers do is they provide capital. It goes directly to the pool which AlmaVest has access to. And then in the process, they also sign an agreement directly with AlmaVest. They sign a loan agreement, essentially, that gives them legal recourse to the capital that AlmaVest is expected to pay back. And then the way that the protocol works is each of these pools has two tranches. And so there's a junior tranche that is first loss capital, which means if for whatever reason a borrower doesn't pay back the money, the first folks to lose their money are in the junior tranche. And then there's a senior tranche. So when this community of backers talking to AlmaVest and they provide capital, they're all providing capital into the junior tranche of that pool. And then what the protocol has is a separate senior pool, which is just taking capital from folks that just want to have it be automatically diversified across different borrower pools. And that senior pool gets automatically allocated by the protocol to the senior tranches of these different pools. And the way it does is it looks at how many of the backers have participated in a particular pool. And if there's a lot of folks who have participated in it, the senior pool will provide more capital into that senior tranche. And it's like an automatic algorithm that's based upon the number of backers. And so the net result is that there's the senior tranche that has capital, and that senior tranche will provide 20% of the interest it receives to the backers. So it increases the interest that the backers receive. And that means that the backers are receiving an outsized yield. And that is compensating them both for doing all the work of evaluating these different borrowers and providing the first capital into the pool, as well as taking on higher risk by being the first loss. And so that's sort of like the key part of it, is when the senior pool is automatically allocating capital, it makes the economics work for the backers to do all of this work of understanding folks like AlmaVest and being willing to put in first loss capital. And so the result that happened, for example, earlier this week is the backers provided a bunch of capital, and then the senior pool provided additional capital, and AlmaVest was able to get the full credit line that they were looking for.